Retail cracks, call me fired. Stock market, we'll call it indecisive. A lot more on that as we start the show.
Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in the next week. And hopefully, a lot of good ideas and opportunities for you throughout the show. Stock market had a mixed week this week, with indexes, well, mostly lower. It's a similar story that we've seen in recent weeks, as the NASDAQ has been the strongest index. Got a lot of help this week from, well, Warren Buffett will say that, as Apple has continued to move up throughout the week, gaining almost 5%. Really strong, and of course the heaviest weighted stock in the NASDAQ kept the NASDAQ moving to new highs even through Friday. The other big piece of news is really about retail, and retail way down on the other indexes, certainly, as Macy's had a huge decline. We're going to talk about that as we get into the worst stocks of the week. That has really helped the rest of the retail group get beat up, and the same-store sales that are coming out of retail are, well, horrendous at best. Steel stocks also were very weak this week, and got to really wonder about that infrastructure play that just absolutely melted away. It might all be infrastructure fantasy when it comes to the Trump agenda. Energy stocks were better this week. That, helped a little bit as oil rebounded off of a panic low last Friday when it got sub $44. Stock market overall for the week, well, most of the indexes were up about 0.5% plus or minus, except for the NASDAQ. I'm sorry, they were down about 0.5% plus or minus, except for the NASDAQ, which is up better than 1%. So most of the broader indexes were weaker this week. Bond market unchanged, up Friday on continued bad retail sales. But overall, not a great week for the bond market, as they slipped early and then came back. The dollar was stronger on a bounce. Friday, it moved down again on the weaker retail sales. That's really affecting everything, as the bond market, got a little bit of a bounce that pushes interest rates down. That makes the dollar traders nervous. So then they come in and sell the dollar. You got to really think that the Federal Reserve, they actually, there's a lot of Fed heads out there talking like crazy, and they really plan on raising interest rates in June, but they're really facing some headwinds right now as growth prospects really keep getting lowered and lowered. So the chances, I think, of getting much more after June are really diminishing. Gold and silver had a small up week. I'm going to talk more about that in just a moment. They were down early in the week and then put on a rebound. Oil, a good bounce, up about $1.25 on the week. That's after it got crushed, and now it's moved up into some short-term resistance, of which we'll show that to our members in our short-term view later on Friday. We produce that on Fridays. So the big question is about OPEC on May 25th as far as oil goes. And OPEC has talked about non-OPEC producers having increased production by some 64%. So they can't possibly offset that. And I got a feeling that, well, they're probably going to extend their present cuts for a little bit. And oils are likely to be under pressure. again. If you also look at rig counts that have gone up and the shale producers having picked up their production, oil, to me, this $1.25 up week it had, I think it's just a dead cat bounce, and our patterns, when we look at our broader cyclical analysis, tells us that oil has more coming to the downside. So the stock market seems to have stalled, basically, as it's sitting up here in that 2385 to 2400 area on the S&P 500. There is to me something very important going on in the markets, in the background of the markets. Recently, I did a lot of big picture thinking about the markets. And actually, I want to share that with you. I spend a lot of time looking at market scenarios. I think about all the variables out there, looking at how all markets are moving, correlations. I try to get a big picture of the markets. Sometimes I stay up at night thinking about these things. 43 years at this, and I still haven't seen it all, and I never will, of course. And I spent a lot of time recently considering present market conditions. Today it seems different than I've seen in the past, even crazier than some things I've seen in the past. I'm going to talk about several different markets in here and tell you, stuff that I'm looking at, and let you, see if you agree with what I'm saying or not. And then, come up with what I think is some important trading environment changes that I think we might see pretty soon. So let's first talk about the stock market. We're moving up to new highs, and recently I've expressed doubts about the ability for this rally to continue without having a significant correction. Let's just talk about the nature of this stock market rally. Led by the NASDAQ, certainly. Russell not quite as strong, and the S&P 500 just barely eking out a new high from recent weeks. And really that's because the move in the market's been led by 6 stocks. I just want to briefly talk about these 6 stocks that have been leading the rally and tell you why I think that won't last much longer. Apple has, of course, been a big leader. Recently had over a $4 jump in one day, as Warren Buffett said that he more than doubled his position in the stock. And that says a couple things. He said that he was believing in the stock, certainly, but also he has a massive amount of cash. And he's having trouble of finding places to put it. So if you believe in Warren Buffett, he's putting a lot of money into one stock that he thinks has value because he doesn't see anything else. Let's talk about Netflix. Of course, the second one of these 6 NASDAQ stocks that have been leading the rally up and holding the stock market together. They found a back door into China, and that's what gave them a pretty good lift. That was through Baidu. However, you got to ask the question, will China allow that? Will that window close that they found? And is it that good for them anyway? Is that market that big for them? So Netflix, in my opinion, way overperforming what the value of that move into China is. Tesla, another one. There's been articles out that they're the next Apple. In other words, that the Model 3 or the battery wall is the same as an iPhone. That's the acceptance that the country is going to give Tesla's products. Well, I think that's absurd. With $50,000 to $100,000 cars out there that are being bought based on subsidies from the government that are going to disappear in the next couple of years easily, and a lot of those cars are going to get canceled, and the potential news coming out of Tesla could be a lot worse than it is right now. And I think that it is really crazy exuberance that's buying Tesla right now. Amazon, well, certainly it's been the retail killer, as we've seen these retail stocks get annihilated. With 8,700 stores plan on closing this year, it's definitely been that. But only, of their recent earnings, only about 12% of that was retail, and it's extremely low margins. The rest of it is in that competitive environment of the cloud, Amazon Web Services, and that is going to be difficulty for Amazon to grow at anywhere near the rate that the PE is pricing here for Amazon. And take Google and Facebook, it's like, ad growth will never slow down. Whereas if the economy slows down, as I'm going to talk more about, that will definitely slow down. And Facebook already warned that ad growth is going to slow down. So that's why the stock, has stalled out in here. So those are the 6 stocks. Going along with that and adding doubts to this stock market move is the huge breadth deterioration, whereas there's a growing number of stocks in the S&P 500, like a large fraction of them, that are down 20% more from their highs. So there's been this like silent stealth bear market going on underneath these new highs that we're seeing. And nobody is really worried because, well, when you have a 9.6 VIX, you essentially have the amazing amount of complacency, and nobody believes that they need to buy any insurance in the markets. Of course, the VIX is a reflection of demand for puts. And when nobody wants to buy puts, the VIX is very low, and nobody wants to buy puts because they're sure the market's going to keep going up. Of course, if you watch the recent videos of mine where I talk about the excessive amount of margin that the net credit reserves or negative credit reserves in brokerage accounts is at a record, so margins at a record low money available to people with brokerage accounts, and fund managers down around 3% of cash. These are record numbers, and that is probably the reason why there's a big deterioration going on in the stock market underneath what we're seeing as new highs. So all of this is the stock market, and I just want to put out there why I'm casting doubts on it as I get to what is the meat of this video that I'm doing. The other big one that we're going to talk about here, the elephant in the room, is China. And there's they clamp down on credit. They're really making a big move in here to, affect the shadow banking, all of everything that has caused excessive credit growth that they essentially have lost control of. I talked about that in the last market week. And what that has brought is a near collapse, and the collapse in some commodity markets, iron ore and the rubber market, and we've seen it in the metals and miners, and gold and silver all moving down significantly. Gold, though, much stronger, and for our members, I'm going to show a chart on that in a moment. Currencies, they're overall have been weak, not being able to get any real rallies going. Well, the dollar had a little uptick in the last days, but basically the only one is the revived euro currency because of the French election, and that has essentially given life to the euro, and that's had a bounce in there. But when you look at it in relationship to cryptocurrencies, and I'm going to make a big deal about that right now, then the value of paper money is crashing in relation to cryptocurrencies. Bitcoin, Ethereum, Ripple, Litecoin, those are the 4 biggest market caps in cryptocurrencies, digital currencies, and they've gained some more than $30 billion in market cap in less than a month, in the last month. There has been a huge explosion in Bitcoin from like the 1200s to the 1760 high this week. This is wild, and it means something. There is big money moving out of paper and moving into cryptocurrencies. Somebody is trying to get ahead of something. And when I try to, get the sum of the evidence of everything that I'm looking at, this huge move out of paper money and into cryptocurrencies this huge deterioration in stocks that I see going on, this collapse in the commodity market, the sum of the evidence is that there is something very big going on out there. The big move in cryptocurrencies, is this the proof of that? Or is this just another tulip mania? Well, massive money is going into cryptocurrencies now. It's not just the little players in there. To move it up in such big money and so much money coming in, there are some big players coming in. And that has to mean something. I actually think that what it means is that the central banks, based on what I think is a deterioration in the stock market and a correction coming that I have recently talked about, this big move out of paper money, I think that all is saying that the central banks are going to ease significantly again. They're going to be forced to, based on some deflationary slowdown that's coming out there, probably out of China or out of a U.S. stock correction. And that's why we're seeing money flowing into the what could be craziness of the cryptocurrencies. So I think that the central banks, the governments that have been doing all this quantitative and qualitative easing, and the threat that we're getting out of the U.S. Fed, the threat that the Europeans are saying that they're getting near an end and ready to taper, all of that, which is a pretty good sign that they think that they're in good shape and that all the economies are fine. I think that they're going to turn on a dime in here, and probably after the June period we get a rate increase. It's going to be a while before we see that again. And that the move towards less tightening or significant easing, depending on how that goes, is going to have a big meaning for the gold market. So, I think that there is something very big going to happen fairly soon in the gold, silver, GDX markets. And I think that really bears some paying attention to. So my subscribers, I have already posted the rest of this analysis, and they're able to see my gold analysis on gold and silver and GDX and the gold stocks. I think something very significant is coming. It's great analysis. That's for our members. Actually, if I wanted to make it easy for everybody to see, because I think it's an important time for this and great analysis. So if you want to see this analysis on gold and gold stocks, become a level 1 member. It's no cost to you. Just go to askSlim.com, sign up, and you'll be able to see the rest of this analysis that I just brought to you with our, of course, cycle charting in there on this entire group. I think you'll find it fascinating, and I think this is a very important time. So become a level 1 member. Doesn't cost you anything. In that section of free videos, we also posted our video about the big picture of the stock market and the analysis about the 2,000-point decline coming in the Dow, which I don't think is far off either, so you're going to want to see that. And there's 3 other great trading videos in there that I think will be very helpful to you. If you like Market Week, this show that we're doing, then, on YouTube, just give us a thumbs up, let us know, and be sure to subscribe to our YouTube channel. And then you'll be getting the heads up when we post things, and we're starting to post a lot of video segments up there. So subscribe to us on YouTube. All right, let's take a look at what the stock market did this week as we look at our 60-minute chart of the S&P 500. Here is that chart. Of course, the gray area is the area of the overnight trading, and the white area is the trading during the Pit trading, as we used to say it. You could tell I'm an old timer when I say pit trading, because there is not a lot more of that going on. So on Monday, after the French elections, there was kind of a big burst. You could see that way up in the left corner right there, but then it started to give it up. Japan had a strong day as the yen fell off. Their really move countered to the yen, assuming that weaker yen stimulates their economy. Fed heads have been out talking, and Fed Mester warned a lot on hiking too slowly. They want to move up in June, so they're already talking that. The U.S. stocks basically weak after the French election, as there was no big move in the euro and everybody had bought for it. Apple did surge. We talked a lot about Apple already today, as Buffett does double his stake and more and really likes the stock. And the VIX trades down to 9.7. It trades near 9.5 on Tuesday. Incredible. The dollar rebounds, and it pressures the metals on Tuesday. So Monday, we had this kind of choppy day right there. Tuesday, though, the markets did try to rally, but then gave it up. And then, of course, a strong close. It seems like we can't stay down on any day where they're really selling them. Did the same thing on Thursday. Bonds were weak on the more Fed had comments, and NASDAQ still moving the market and not letting it fall very far. Wednesday was the day when FBI Director Comey, we came in and found out he was fired, or the night before. World stock markets kind of were weak on that. They were thinking, well, this might really get in the way of the Trump agenda, as Democrats will use anything that they can against Trump, and they certainly are using the Comey firing, even though they wanted him fired. So there's some odd paradox in there. I could use some other words. And gold and silver and bonds, they bounce, and NASDAQ finally has a little bit of a weaker day, but the stock's really firm all day, even though the NASDAQ gave some ground. World markets were mixed on Thursday, and Macy's earnings came out. You can see right over here. Man, this retail debacle goes on. It took down all the retail stocks. A big sell-off there. You can see that went on in the S&Ps. And Dudley started to talk about cutting the balance sheet. So there you go, Fed heads at it again. What happened was that the distillate inventories came out, and that lifted the energy sector, as those had a big drawdown. And this is the energy rebound essentially going on as the market came back from steep declines. It looked like here it was going to be a bad down day, but nope, the market could not give it up. And then on Friday, as we are right now, moving into the final hour, the world stock markets are just plain out quiet. CPI comes out in line. Retail sales had a small bounce, but it sure wasn't much to help as JCPenney's comes out. They're down on the day, and their same-store sales down 3.5%. That's much worse than estimated. They've been hoping to get saved, and I'm going to talk about that and the worst for the week, because JCPenney is one of the stocks that I've been thinking is going bye-bye. Apple again helps the NASDAQ as the market gets saved by a lot of buyers that push up Apple to an all-time high. Take a look at the calendar for the coming week, and you will see that, well, the things are really calming down. I think that some of the most interesting earnings, again, will be in the retail category. The Target reports before the opening on Wednesday. Cisco after the close on Wednesday. And this is a big one, Walmart. Walmart is one of the retail stocks that has held up really well. And I just don't know how they could possibly withstand this onslaught of retail turning down. And I won't be surprised if Walmart disappoints the street and we see some real selling going on in there. So dear before the opening on Friday. And as far as the economic events going on, there really is not a lot there that I would say is very significant. And that would mean to me that, well, probably have a quiet week, and I'm actually going to talk about that towards the end of the show, about the potential for a quiet week in the market. So that's the calendar for the earnings and economic events. And I'm going to be right back with the best stocks and the worst stocks for last week. All right, for the best stocks of the week, the first one I'm going to show you, I'm actually quite proud of. Second one I'm going to show you actually got pretty wrong. So the first one I'm going to show you is Triple D, DDD, which is the 3D printer, of course. It was just in the last couple of weeks I was talking about a really beautiful, magnificent, bullish pattern that I thought the stock was going to get a pop, and it's up 25% on the week. This is just a beautiful pattern, and it gives me the opportunity to talk a little more. Whoops, that wasn't the chart, was it? That was my caveman coming back. Here is the chart that we're looking at, and I want you to see down here, for people that are new, these are cycle brackets that you're looking at right there. Cycle brackets are essentially our guides to help us find repeating patterns in the market. Cycles are essentially the visual depiction of money flow in and out of the market, and it comes and goes in repeating waves. And we do all of our work based on cycle analysis. Here you can see there were very clear cycles, and this is the rising phases right in here. You could see those. And this is the corrective phases right in here, and you could see those. When this corrective phase was ending, at the bottom of this pennant, the big year-long pennant that was being built, and then we got that engulfing right there that we talked about right at the cycle timing low. That's right in here. We thought it was bullish right there, and then we saw this trend line, the top of it, and we thought just 3-4 weeks into this rally, it was likely it was going to break out, and it did. Just this monstrous move. We have now put in the Fibonacci confluences, which are essentially multiple Fibonacci extension areas that suggest where there might be resistance. So the stock has had a giant move, and in this area of 22.75 to 23.35 looks like the first area of resistance. And you can see that based on this cycle rhythm that we see right in here, this is our projection that you see right there. So, we don't see it getting much above that area and rolling over and going into a correction. And then, of course, the possibility of even further upside. But this was really a big move, and not one that is likely to extend a lot further than that without some additional news. They have a 3D printing solution, a new one that everybody loves, and earnings, though, came out in line, but they're looking at the future at this new 3D printer. So next one we're going to look at is the one that I did not do so well on, and that is NVDA, NVIDIA. Now, what I had seen going on in here was what looked like a cyclical breakdown. And there, occasionally things happen where you get, nothing is perfect, and where you get this look like it broke down right there. In other words, this is where the lows were. It rallied and then came down and almost broke the low right here. So I read that as negative. And when it got a bit of a bounce, I saw this formation coming right in here. So I thought that NVIDIA at the moving averages with this bearish pattern was going to move to the downside. That was my analysis, but their earnings came in huge. Analysts all over it. They love this new massively expensive chip that they have, and this stock soars 21% on the week. And really, what I would believe would be overall good analysis that just did not work. And I had to make the same analysis anytime based on what I saw there. Here you could see, as we look at the daily chart in here, it was hovering around that 89-day moving average and was having trouble getting any upside momentum. But look at these last 3 days after the earnings report, and it simply exploded to the upside. So NVIDIA was one that we got wrong. Now, let's talk for a minute, because you just heard what I said about the gold and silver stocks. And I want you to go, sign up and watch the rest of that video with the analysis in there. But these things are starting to move right now, and they're jumping ahead. And I know that the stuff that I've been talking about Bitcoin and weakness in the world markets and all that, is the buyers are starting to sneak into these stocks. AG in the silver category up 16%, Hecla up 8%, PAAS, which is Pan American Silver, up about 6%, GDX up about 5% on the week, and Goldcorp, GOLD, and AU, those two gold stocks up about 5% on the week. There is money sneaking into this gold area, so I want you to look at some of those stocks. I'm just going to put one of them up for you so you can see, and then you can go back and look at the rest of this group, and you'll be able to get a sense for a group that is starting to make an important bottom. So here is AG, First Majestic Silver. This has got some interesting patterns in it, and again, you can see the cyclical analysis that we always have in here. And when you look at the timing, the area of bottoms and rallies, that was this one right in here. And when it broke down, like I just told you, I thought NVIDIA was doing, it brought you the long decline like it was supposed to. Then you get into this area, and by the way, a beautiful diamond that made the low, and you got a rally, and now you're coming down right into this time period, finding the support at the same spot, and now moving up and engulfing that bar. That is really bullish, and we would expect a pop in here up to about 11.5 at a very minimum. Yeah, that's a giant move in First Majestic, and I just wanted to give you a little bit of a peek at the patterns that are forming, and make sure that you go watch that video, and I think you'll see some things of value. Take a look now as we look at some more of the stocks that have done well for the week. Electronic Arts, EA. Now this one just absolutely exploded to the upside, and I've got some interesting analysis in here. Their earnings missed. Their revenues were a little bit better, but they put in a $1.2 billion buyback, and the stock is moving up on the buyback. It's the right time based on our analysis also, as let's just take a closer look in here, and you can see that these bottoms pretty much came on time. You can always look at the declining phases and the rising phases, and you can see the bottoms as they form in the cyclicality. When you get it a little bit early, then you end up getting a sense that there's anxious buyers in there. When they go down for a little longer period of time, you get a sense that there are a lot of sellers out there. Here you could see an explosion to the upside right there in Electronic Arts. Somebody must have known they were going to buy a lot of stock. It moves up into this giant fib confluence. I actually think the stock is a short. And a lot of time when stocks announce buybacks, they go up a lot and then they just stop and then they start to ease back because the buybacks, well, they take a long time. Here is where you can see it. If you look at the daily chart, this analysis got ahead of it. Here's where the slim ribbon turned positive, and it was positive through right in here. You got some stalling going on right in there, and then of course the news of the buyback comes out and the stock explodes to the upside. I actually think it's going to stop pretty soon based on this resistance area and the fact that $1.2 billion on this stock, well, it isn't all that much, and over a long period of time it may not be that much support. Take a look here as we look at a really strong stock in a very good group. Here is Marriott. Look at this thing extending to the upside. Their earnings beat what was the projection for the fourth quarter in a row. And man, it has been in one upward bullish pattern that you can see in here. You can just follow the cyclical patterns right in here and see that, wow, this one we call a right-hand translation. There was almost no time to decline and then moving up. But it is late in this advance right there, and we would expect that pretty soon it will be rolling over also. So some of these stocks that have these big gains, especially in big groups like this, they get really overdone. And what we see right now is that, now if you look at 34-week moving average. A lot of people watch the MACD or disparity index or something that gives you a sense for overbought, oversold. Here we're looking at a 2-year chart, and you can see that anytime it gets far away from the 34-week moving average, here and here, it bounces back to it. You can see it. Or if it gets far away, it comes back down to it. Well, this is an extraordinarily long period of time. So somewhere in here, this is a rising moving average, and this stock is going to come down and greet it. And that's why we think that this is overdone and likely to have a pullback. Wynn Resorts, you can see that right in here. This has been in an upward phase. We caught this upside on here, beautiful. It's now up here at our first target and starting to stall. And as far as the patterns in here, you can see bigger one and smaller one. So you see the small ones right in here, 1, 2, 3, and 4, and then a correction. That's 1, 2, 3. Not much of a little decline in there because it was strong, rallying, and then 4. So again, like we said in Marriott, this one's come a long way. It's a long way from the moving average, and we would expect that it would have some correction. Maybe it's about the China slowdown that it'll have some correction. But I think that overall, it's a really good-looking stock. So we get the correction we're looking for into the summer, which is what we think is going to happen in the stock market. Watch the video. Then I think it'll be a really good stock after that, too. Just now, maybe gone a little bit too far. One more group on the positive side I want to talk about that did not move very much, and that's the home builders. So home builders like it when interest rates are low generally. If the consumer comes apart in here like it looks like, it might not be all that helpful for the group, but the patterns in there are gorgeous. And so a group that didn't do all that well, that went up like 2-3%, I kind of want to show you these because they could be giving you some good upside trades, and that's what this is about, showing you opportunities. So let's take a look here as we look at 3 of the home building stocks that I think have the best setups to be moving to the upside pretty soon based on our cycle analysis. And here is DHI. This is DR Horton, and you can see what we call a positive cycle, positively configured, where it rallies and then there's only a little time to correct, and then it turns up again right there. Essentially what that is, and this is a basic lesson on cycle, and I'm putting together a cycle workshop, that is this trend that you can see right down over here, the idealized cycle movement, added to an uptrend, and it gives you this right over here. So that's this right in here, and it's right at the point where it's ready to move up. And you can see this if I zoom in. You get this engulfing pattern that's going on right there on the weekly, and that's a nice pattern, and I think you're going to make a new high there. Take a look at Lennar, L-E-N, and you'll see, well, it's just barely starting to turn up, the same type of a pattern in there. And then the last one we're going to look at is PHM, Pulte Home, and almost identical. That is the principle of synchronicity at work, where like stocks within a family, within a group, put together synchronized lows and the same similar type patterns. Similar type pattern we have is a long rally, a brief decline, and getting ready for the next rally, which says that the upward momentum remains in here. And maybe it's just about the fact that, well, there's hardly a way that there can be much of an interest rate increase under the conditions that we're seeing now in the market. That is the best of the week, and now I'm going to show you the worst. All right, the worst of the week. I mean, this whole section is just littered with garbage, litter. The retail stocks. I mean, they have just gotten decimated. And the one I love to hate, JCPenney, also is another one that got hit pretty hard. as their same-store sales missed. That's pretty much the story across the board. 7 out of 10. The top 10 stocks that did poorly in our list of 320 stocks were retailers. Macy's, as I said, really one that exacerbated the move on Friday as things started to really move down, but Dillard's didn't help it either. Now I'm going to show you, I just showed you some bullish patterns. Now I'm going to show you the bearish patterns and how they have been in continued bearish patterns based on the cyclicality. Anytime you get a rally that gives up more than 100% in a cycle, you can see that right in here, it's a negative cycle. You expect the next one to rally and fail, and you see that right in there. This one, well, similar rallies, doesn't quite make the high and fails, and this one fails so early, it's got way out into late July before that's over with. So DDS down 18% on the week. Earnings in line, but their sales missed badly. Macy's, take a look at Macy's in here. And here you could see a really horrible pattern. I mean, the same thing as it has had this breakdown. This looks like a decline out into September before this one is over with. Very least, this shorter, we'll call it minor cycle, comes out into June. So there's just massive downside gaps in here. You could see like this on the huge decline on 5/11 as their earnings and sales missed. So really horrible patterns, big negative momentum that we see there in Macy's. There we're back at the weekly. Take a look at Nordstrom. Here is Nordstrom, and it had this megaphone forming, and we wondered if it was going to make a trip back to the bottom of the megaphone. The fact that it's doing it is an awful thing. This decline looks like it projects out to August, so another one that you got to worry about, and you certainly can't be buying it. Here's JCPenney, which I have said was the highest priced $2 stock that I look at. Well, I said that when it was like 10 or 8 or 6 or 5, or how about 452 right now? Headed down to 2 or lower when they have the big B, and that's the look of a stock that just absolutely has been horrible. And the momentum in there is, they've tried to get a little upside momentum at times, but basically it's been horrible. Take a look at the slim ribbon here, where you see the momentum turn negative here at 9. It neutralizes right in here for a few days, turns negative here again at 6 3/4, and you can see the big downward gap right there. So JCPenney, just an absolute piece of garbage, and not likely to survive. It was said that Sears was on the list of somebody's list of the top stock that could default in the retail category. They have now denied that, but it's still down 8% in the week, and so is Dick's, down 8% in the week also, as this very horrible group continues to move to the downside. There will be bounces in here. There will be times when people cover shorts, or somebody sneaks some good news out, or that's likely all to be fake. So I hope you don't get hooked by that, because it's probably going to happen. Take a look at Yelp, YELP. And this stock, a big crater to the downside. This is, I'm bringing more advanced analysis into this show in here, because I really want you to get a sense for the type of analysis we do, cycle analysis. There's not a lot of us out there that do this. So it's I think one of the greatest fields for learning about technical analysis and technical studies is the study of market cycles. And when you look at it, there's nothing esoteric about this. There's nothing woo-woo about this, right? It's just simply, a picture of money moving in and out. And you can see in here this blue uptrend that we have in here, as it's enveloped, as we say it. It shows the channel moving up. So here's your positive cycle and your next positive cycle. It's pretty clear. You could see those two right there. But then as the major trend begins to roll, you could see that right in here. It rolls, and then this cycle falls short. In other words, it can't make it up there. It no longer has an uptrend, and then it turns down and breaks down. And these two cycles make a perfect M-top. You could see that right over here. An M-top is formed by two cycles. Very clear, and you could see that right there. And then the major cycle the major enveloped area, and that shows you the trend turns down. So what we can do is take this and project down to a temporary low coming this month in Yelp, and then a potential rally right in there within the downtrend, and then the next leg to the downside that you see as we project right there. So we use all this information to give us projections. We can do time, we can do price, and there's not much out there that gives you the opportunity to do time and price the way that we do. And we could see this stock getting a rebound sometime to around 30, 31 from 28.5, but then moving down again, and we wouldn't be surprised to see it sub 20 after that. All right, so now let's take a look at the restaurant industry. A brief comment about this industry, because I think the consumers got problems, and you can see that. Well, they're way overbought in subprime auto loans. The auto industry has got massive amount of inventory out there. Subprime defaults on the rise. We have basically sales in the major department stores and retail crashing. So you've got all of that. So I think the consumers got some problems. So when I show you Cake, C-A-K-E, which is down 7% on the week, I'm also thinking about the rest of this group. And the rest of this group might have some problems because they've gotten crazy on the upside, and maybe Cake is the canary in the cake mine. Do they have one of those? Anyway, here is C-A-K-E, Cheesecake Factory, and this is a bad breakdown. Now, for our level 4 subscribers, we often put in these notes right there, and when there's a cycle violation, the probability of a continued decline through the entire declining phase is high. That takes you a decline into mid-July. You could see the massive rejection right over there, that big tail as it tried to make a new high, and then the breakdown. This is one really ugly pattern. Now, you want to see an ugly pattern, take a look at this. This is called a bear kicker, where it moves up to the high, you could see right there, and then completely gives it up. You see this big break and that big gap right in there? And then it just completely rolls over as the momentum got lost and turned negative. So this is a horrible pattern. And when you look at the rest of this group in the as far as the rest of the restaurants go, I mean, they have gotten crazy. Look at Darden, D-R-I. Now, remember earlier in the show, I talked about the distance between the stock and the 34-week moving average, and how when it gets away from it, it normally comes back to it and comes back to it and keeps crossing it. Usually the cycle rhythms have you crossing the 34-week moving average. This one only hit the 13. You can see that right there. And now look at the distance away from the 13 and the 34. Believe me, when this corrective phase hits, it's going to be significant. It's going to look like one of these right in here, where it gives up a lot of ground. Take a look at the daily chart in here, and you'll see positive momentum based on the slim ribbon, and a long way from that 89-day moving average right there. And you could see when it did that over here, it eventually worked its way back to the rising 89-day. So you can see that that's basically what we see. This one, I mean, the distance that it's moved is just crazy. And I actually don't think that the consumer is going to be able to support this kind of movement. McDonald's, I think this one is as nutty as it comes moving up here. Now, our cycle work had the bullish call on it, really. I mean, you can see in here this beautiful pattern in here where this corrective period brought you nothing, a sideways week there, and sideways month, I mean, and hardly any movement. And then when it broke out above that level, it exploded. But again, look at the distance from the 34-week moving average. This is massively overbought. The best case we can make in this correction right over here is a move down to about 138. That would be a 7-point drop in here into the July period. And yes, there is lots and lots that we've been showing that looks like July or August are important months. And when you see our big picture analysis on the stock market, where we talk about the big drop, if you watch that video, it points into that July-August period for the correction that we think is coming in the market. And there are a lot of stocks that have that same alignment. So you're going to want to go watch that. So that's it. That's the best and worst stocks for the week. And we're going to get into what is a very popular segment, and that is our short-term view for the stock market for the coming week. All right, I'm going to tell you 1 second what I think is going to happen in the stock market in the coming week. One thing that I want to talk about before I do that, you know, I've showed a lot of technical analysis in this show. I mean, that's, you know, it's at my core, 43 years at it. And I have studied so many of the different indicator studies. And in our member section, what we offer is a huge amount of videos. We have over 250 videos in our member section. I picked out, just so you could see, some of the best, most interesting videos that we have in our Tools for Tech section, which, if you like the work we've been doing, I think that you'll really gain a ton of knowledge by becoming a member and watching these videos. Here's just 17 of the videos that we have in that section that I have brought. I mean, it's all me talking and teaching on all of these. It's the tricks and relative strength and stochastics all in one video there. An amazing video on Heikin-Ashi candles that I just recently did, which shows you great momentum and how to stay in positions for a longer period of time. TTM squeeze, Fibonacci retracements, Fibonacci extensions, the slim ribbons that I show you all the time and how to use those. Gap trading, which I think is so important. Momentum and using momentum studies in earnings plays, money flow indicators, Bollinger Bands, Keltner channels, the ease of movement indicator, probability of expiring cone, which is great for option traders, the 22 best candlestick patterns, and also setting up support and resistance zones on the charts like you see me do, correlating futures, 2 different stock groups, which is great, some great correlation pieces, and chart setups for scalpers and swing traders, some great 2 and 3 chart grids on using this type of analysis for, you know, shorter term traders. That's just a tiny little peek of what we have in our memberships. Just incredible. If you want to see all of our rankings and setups and the best stocks, and you want to see all of our videos, you can become a level 3 member, and just for the amazing 1-month trial, if you want to do it, and then just leave if you don't like it, but I know that you will, for $43. All you have to do is send me an email to slim@askSlim.com. I'm going to send you a link, and you're going to sign up for level 3, and it'll be the best $43 you have ever spent, believe me, because there's so much learning in there. It's incredible, and I think you will absolutely enjoy it and be thrilled that you did it. So send me that email. All right, so let's get into our look at the charts here as we look at the short-term view for the stock market for the coming week. We're going to look at the S&P 500, and we're going to talk about what I said last week. Now, note that I do a member video every Friday also after I record this, where I look at 5 segments of the markets and do a lot of momentum studies and comparisons. So you'll even see that in the level 3 membership. But right now in this, I just do the stock market. In that other one, I was about 85% accurate last week, which is just off the charts. So it was really a good week for my analysis overall. So let's take a look here at the stock market. We'll take a look at what I thought was going to happen in this week. And basically what I said was that I thought we were getting into a period that they would rally, but we were at resistance and then they would fail. and that I thought that they would get up to maybe 24.05 to 10. They got almost to 24.04, so I missed it by 1.13 and then roll over. I warned about this minor cycle level, which it almost got to and then bounced off of there. So the pattern that we were looking for was great. Now what we're looking for is you can see these blue lines in here. That's the small patterns right in here. You could see that. And then this is the bigger pattern right in here. That's this black one right there. So we're kind of showing you how we look at the dominant and minor cycle when we look at this. And it, follows the patterns really nicely. Sometimes it gets a little bit off, like this one was short right in here, and that kind of messed us up. It couldn't make a lower low through this period. It really was screaming strength at us. And right now, the configuration of this bigger dominant cycle is positive. What that says to us is that, well, we have another rally coming. That's how we have it drawn in here. And what our expectation is that it will again try for that 24.05, 24.10 area, somewhere in there. Now, we have some bond low timing right over here, and bond low, I know, what is that silly language, right? It means that's the time we think that there's a major bottom coming in the bond market, or trading bottom, and that's where we're essentially looking for a peak in the stock market. So we still think there's not a lot of upside in here at all. Again, fighting what we think is upside resistance against the upward trend, and that should get you back up to this 24.05, 24.10 area. We're going to look for this pattern, maybe a small down early in the week and then rally, and then actually rally into the next week out over there. If we get that pattern as we expect, the amount of the rally is going to tell us a lot. If it happens to come down a little bit, rally, and then come down and break the low, that is going to be a horrible occurrence. That would be screaming top to us. If it can, give the pattern that we expect in here, then the market will still be whole. And we essentially do see still very, very strong momentum figures when we look at all of the major indexes, except the Russell showing some deterioration. So that's what we're looking for. We're just going to call it a little dip maybe early in the week, and then a upside move. We'll call it maybe a small up week overall, but the risks growing after that. And I still believe that the risks are very significantly to the downside. So that is our short-term view for the coming week. I hope you have really enjoyed the show. Don't forget, become a level 1 member. Send your request to slim at askSlim.com to become a level 3 member for the special $43 rate. And follow us on YouTube. Become a YouTube follower and join the askSlim family. We're really friendly here, so I think you'll be happy about that. That's it for the week. It's crazy out there. I always want you to be really careful, and I'm always wishing you great trading.
Well, I'm going to sit